Hello, financial fans. We'll talk a little bit about ETFs, exchange traded funds. Those are funds that have stocks, lots of different companies in their holdings, and they trade like individual stocks on the stock exchange. You can buy them any time of day at different prices as the individual stocks that they're holding go up or down. But we're going to begin with SPY, which is an exchange traded fund that tries to mimic the S&P 500, and a lot of times the ETFs, the exchange traded funds, a lot of the ETFs will do better than you or I or someone else might do sitting in front of our computer screen trying to think our way through what is the best stock to buy. If you just buy the exchange traded fund and forget about it, it might have a better year than what is being had by someone who is picking individual stocks. Like myself, I do enjoy the picking of individual stocks and I do all right, but usually I would say the SPY beats me year after year. But we'll take a look at the numbers here for SPY, and we will show you why this is such a good first step into the stock market. I'm not a financial advisor, and I'm just showing you what I do or don't buy. And this SPY, what we'll look at is the numbers on the middle column near the bottom. We'll look at a couple of numbers down there. The first thing we'll look at is expense ratio. Second item from the bottom on this particular page, 0.09%. That is a very low expense ratio. That's to pay somebody for, I guess, coming in and sweeping the office every now and then, but 0.09%, less than 1/10%. That's very, very good. And now we look up at the middle of the middle column, year to date, YTD daily total return. The year's not over yet, and as of right now, SPY is ahead 21.64% for the year. So that's a very good jump upwards in a very strange and hectic year with a lot of different down days during the year. SPY seems to do no wrong. Now what I'm going to do is show you two of the funds that I own and show you what happened to them over the years. I'll tell you first of all what happened. I'm going to talk about ARK funds, ARKK and ARKW. Those are the specific funds I'm going to talk about. And on my cheat sheet here, ARKK, I owned it last year, 2020, I owned it in 2021. ARKK in 2020 was up 152%. That's a very good move upwards. ARKK and ARKW in 2020 was up 157%. Now that sounds incredible, doesn't it? But in 2021, ARKK is up 2%, and ARKW is down, I believe. Let me take a look at ARKW here. We will look at ARKW. ARKK for the year. Okay, ARKK for the year is down 3.5% this year, and ARK, here we go. Okay, ARKK is down 3.5% for the year, and ARKW is up a little over 2%, so it's not doing too well. And the expense ratio is 0.79 for ARKW and it's 0.75 for ARKK. So in other words, it costs more to play this particular ETF than it does to just stick with the SPY. But we will look at some other exchange traded funds and see how they have been doing this year, and then we'll come back and look at the numbers for SPY one more time. Beginning with ARK, an ETF called ARKK, and this is an exchange traded fund, of course, and I do have it in my holdings, and it had a great year in 2020 and not so good in 2021. As we look at the numbers here, center of the center column, in the middle of the center column, and it's year to date daily return total minus 3.5%. And we look down at the bottom, expense ratio 0.75%, which is a high expense ratio. So it's having a bad year. I am holding on to it, but I certainly wouldn't recommend it right now. ARKW, another exchange traded fund that I own, middle of the middle column. Year to date total return a little over 2%, 2.13%, and the expense ratio 0.79%. And again, I am going to be holding on to this, but I do not recommend it. And I would not be recommending any investments other than those that you have studied and you've made up your mind to invest in. Here is the page at Yahoo. By the way, Yahoo has great financial pages with lots of information. This page for Ishares Europe ETF Exchange Traded Fund, and the symbol is IEV. So this covers lots of companies in lots of countries in Europe, and we see in the middle of the middle column, year-to-date total return, not bad at all, 16.96, almost 17% return on money so far, and the year's not over yet. And at the bottom, the expense ratio 0.59, which is higher than I would like to pay for an ETF, but this one has done well for its investors. Now we look at iShares Global 100, and it looks like the symbol is 100, but that's actually IOO, Exchange Traded Fund, the middle of the middle column. Year-to-date total return 18.73%. That is very good. And the expense ratio down near the bottom of that middle column, 0.4%, which is not too bad, not as bad as some. But again, the S&P 500 has a lower expense ratio and a higher return. Here's iShares Global Healthcare. You can invest in ETFs that are healthcare related, mining related, tech related. There are many, many, many choices. So do your homework before you buy anything. The symbol here for iShares Global Healthcare ETF is IXJ, middle of the middle column. 15.18% return so far this year, and the expense ratio 0.46, which is getting up there, and again it's not competing with S&P 500, the SPY ETF. ETF is exchange traded fund, and SPY is a symbol for the spiders. This is the fund that tries to mimic the S&P 500, and it's doing a pretty good job here. The year-to-date total return 21.64%, expense ratio 0.09. This shows that SPY is a very, very good investment this year so far, and maybe you can beat it, or maybe I can beat it. It's still not the end of the year, so we shall see what happens as the year progresses, and just study some ETFs as well as stocks. I thank you for watching.